Friday cheer on the Lal Street following stellar rally from IT majors, TCS and Infosys. Sensex jump over 600 points while Nifty hits a life high. Most sectoral indices in the green, IT advances most, followed by PSU banks and realty. Nifty Auto emerges as the top sectoral loser. We spoke to TCS's CEO K. Krithivasan, who tells us that they remain cautiously optimistic on their order book and expect better macroeconomic sentiment to drive growth. Meanwhile, Infosys trims its revenue guidance to 1.5% to 2%. And more IT earnings on the radar today, HCL Technologies and Wipro to post their Q3 earnings. Meanwhile, Prime Minister Modi will inaugurate the most awaited and India's longest sea bridge, the Trans-Harbour Link in Mumbai. Hello and welcome. This is Hot Money. I'm Agam Vakil. And in this show, we take you through all the stocks which are buzzing in trade. But right at the top, let's start by taking a look at the markets and how they're faring at this point in time. Well, it's been a fairly quiet market at the moment. And even though we've hit life highs in today's day of trade, we haven't seen too much traction, at least in the last couple of hours of trade. As far as the Nifty is concerned, trending well above the mark of 21,800, higher by around 0.8 of a percentage point. And it's the same for the Sensex, moving largely in tandem, both these indices. And to talk to you about the Bank Nifty, that is where we're seeing just a tad bit of underperformance, but it's in the green all the same. So we are looking at a 0.5% increase there as well. And we'll continue to keep an eye on the index level, specifically there, because we have seen the Bank Nifty trend comfortably above the mark of 47,500. The question really is if we can, in fact, hold on to these levels. Even in terms of the constituents of the Nifty, let's take a look at where there is a pull and push with respect to the stocks that do comprise of the Nifty. And we do have the Infosys and TCS right at the top of your list, which are, in fact, giving you the most amount of support towards that index. On the losing end, we have some amount of pressure from HDFC Bank, M&M, and Asian Paints. So keep an eye on these counters. And naturally, today is a day where information technology will continue to be in focus, not just on the back of Infosys and TCS, but also, we're expecting earnings from HCL Technologies and Wipro. Moving on, as far as your broader markets go, again, a tad bit of an underperformance on an intraday basis when it comes to the mid-cap 100, and it's the same for the small-cap index. But on that note, let's talk about one company which has been in the focus of late, not only on account of earnings, but also changes in the taxation regime for this particular sector. I'm talking about Delta Corp. Now, we had a relatively volatile last couple of months when it comes to this particular gaming company. And we're in conversation with Anil Melani. He's the CFO of Delta Corp. Anil, good afternoon, and thank you so much for joining in.
Thanks for having me, Agam.
Right. So, Anil, I'm going to get straight off the mark by asking you about the change in the GST regime that we've seen before October 1st and after October 1st. From what I understand is that earlier, there was a GST implied to gross gaming revenues, and now it is the sale of chips. Can you tell us whether or not this actually has some sort of an impact on your patron sentiment?
Yeah, so we just completed our first quarter with the new post-GST tariff that has been introduced by the government. Okay. So prior to this quarter, you would have guests coming in, and they would get full value for the chips that they purchased. The GST was borne by us as a company, and we would pay that on our gross gaming revenue.
Right.
Post 1st of October, overnight we were told that we need to charge now 28% GST on every sale of chip that is done to the guest. So from getting full value, when you suddenly perceive to be getting 28% less, there is going to be a resistance.
Right.
So yes, we did see a drop in footfalls. We did see a drop in our revenue for the first few months of the quarter. But over a period of time, we realized that the guest needs to have some compensation and value for the money that they're exchanging for chips. So we started introducing and took some new initiatives and brought in promotional programs. And for the month of December, as I have been in our investor call and with other media exchanges saying that close to 45% of our turnover for the quarter came only in the month of December.
Right.
So we managed to give back value to our guests. We managed to retain them.
Right.
And going forward from this quarter onwards, we do believe that our business will settle down.
Okay. As far as the quarter gone by is concerned, it wasn't just the GST aspect which played well against your revenues. I was actually surprised to learn that because of in spite of the fact that it was the holiday season, there was the element of Diwali as well as the World Cup which played against and adversely when it comes to revenues.
That's correct. So typically what happens is the footfall and the tourist traffic into Goa picks up post-Diwali.
Right.
This time Diwali was late. We also had a lot of festivals prior to that. There were some religious functions where people don't really travel or go out. You had the World Cup. So all this played along. And finally what actually also happened is that, the previous years you had COVID, international travel was subdued. This time, all destinations close by have opened up.
Right.
You have visa-free arrivals.
Right.
So you don't really need to worry about that. And I think quite a few travelers wanted to venture abroad. And given value for money, I feel that many of them felt that moving outside gave them a better proposition than coming into Goa. They found Goa
Right.
to be pretty expensive also.
Right.
Having said that, the number of flights are increasing from various cities into Goa,
Right.
from other destinations. So we're confident that the tourist traffic will actually come back. But yes, there was between a 10 to 12% drop even in our visitations.
Right. So you did suggest that about half of your revenues for the quarter gone by came in the month of December.
That's right.
Is that, can we extrapolate some sort of a number when it comes to the upcoming quarter? Do you think that you could see the same run rate for the upcoming quarter? That's the final quarter of this financial year?
Yeah. So as far as our current vessels go, one of them goes into dry dock coming Monday. It's going to be away for a month. So to that extent, our revenue is going to be slightly subdued. But with the other vessels, I think we are pretty confident that we will get back to the same run rate. Obviously, there's GST impact. We are paying much more amounts this time towards GST. So our margins are going to be subdued and drop to that extent.
Right.
But on a run rate basis, we hope to be nearly there this quarter.
Right. Okay. Well, my next question actually is to do with the demand notice that you have of a little over 2,300 crores, 23,000 crores. Pardon me, because that is a substantial number there. Yeah. My question is that what, according to you, how are you assessing the basis of this particular claim? And of course, there's no provisioning. Can you take us through how you are, in fact, dealing with this particular, update?
So the matter is sub judice as we speak.
Yes.
It's being represented by our lawyers, who feel that the demand is arbitrary and vague in law. We have managed to get a stay in all the high courts that we have filed our appeal, and we do believe that most of these matters are now going to get clubbed and will be heard in the Supreme Court. So I can't really comment much on that, but we are pretty much hopeful of an outcome that would be fair.
Sure. All right. So Anil, let's talk about what the future has in store. If you could tell us about your expansion plans going forward. I believe you have another ship coming in the works. When is it due, and what sort of a capex have you already outlaid for it? How much of that have you already spent?
See, as far as our casino business is concerned, we are pretty confident about it. We know that really well, and we've been doing it for 15 years. The business itself is resilient. We realized much early in the days that the capacity is going to be filling up soon. So we embarked on this journey a couple of years ago. And, under the Make in India policy, we're actually building a vessel in our yard in a place, Hangarkatta, which is close to Udupi. Vessel is doing well. The progress is on. We are hopeful that it needs a lot of regulatory clearances and building a vessel as compared to putting up a casino and land.
Right.
There's a lot of difference. We should be able to bring her in hopefully in the end of second quarter, early third quarter.
Right.
And confident of getting her into operations probably by the end of third quarter. But we are 100% sure that she will contribute to revenue by the fourth quarter.
Sure.
So I don't really want to commit on dates because there's a lot of moving parts.
Yeah.
But hopefully we should be into full operations by the fourth quarter of this year.
Right.
So the capacity that we are building is going to be equivalent to twice our existing capacity.
Okay.
So
right.
that's going to hopefully increase our revenues substantially.
Right.
Our business is fixed cost business, right? So there is hardly any variable component, maybe a little bit of on the F&B front, transport, logistics, but
right.
Otherwise it's a pretty much fixed cost. So if your revenue drops to whatever extent, it impacts your bottom line straight away.
Absolutely.
So to that extent, our margins really drop.
Right.
It works the reverse when your revenues go up.
Right.
So once you cross that threshold of your fixed cost, then everything that we get over and above that straight away doesn't hit up here, but contributes to the margins and contributes to a healthy bottom line.
Right.
So with the new ship coming in, I think that's pretty much a given.
Right. Okay. So I also want to talk to you about your online gaming business. At the moment, we're seeing some challenges there as well on account of the changes in the GST regime. Can you talk to us about that and what lies in store, perhaps in FY25?
So the online actually is a different business as compared to the casino. I mean, whilst I think everyone's trying to see it with the same glass, but it isn't really the same way because they're both distinct businesses. In the online space, all online companies actually, but there are several larger players than us. All of them have actually gone ahead and compensating the players who are putting a deposit in some promotion or the other, some bonus chips or the other.
Right.
There isn't any new investment coming in this space, given the uncertainty.
Sure.
The runways for many companies are now beginning to feel short. So we believe that there's going to be a shake-up, consolidation.
Okay.
Our mainstay in online has always been poker. Prior to this new tariff, of course, we were coming with the IPO, which is now currently on hold.
Right.
The whole effort and the business plan over there was to grow the business, move into a multi-gaming platform, focus on other games like Rummy. But we've kind of put all those initiatives on hold, and now our focus is only poker, which has always been our mainstay.
Right, absolutely.
On an EBIT level last quarter, yes, we made some profits, nominal, but yet we aren't bleeding, and we don't intend to bleed because that's always been our company ethos not to burn money.
Sure.
So we're very clear about that. Yes, the quarter has been subdued, and maybe a couple of more quarters may be subdued. We are holding on. We don't see any substantial growth, but we will be slowly clawing back our business.
Right.
By then, we are hoping clarity on the GST issue is also resolved. And then, yes, we'll be back full guns blazing as far as our online space is concerned.
Right. So in terms of expectation of resolution on all these GST issues, when do you have a rough timeline that you guys are working with right now?
Extremely difficult to predict, but we are hopeful it'll be soon. I really can't say. We've got one matter, our Daman license, which has been lying in the courts for a very long time.
Sure,
we are expecting a resolution on that also anytime soon. But we are waiting.
Right. Okay. A very quick question on your realty business. I'm not sure, but I think this is a re-entry into the realty business after many, many years. What's the plan here? Is this just a strategic move, or do you have a grander plan as far as the real estate sector is concerned?
So our current expansion, like there's a new ship coming in. We've got a hotel under construction in Goa. That's all going to increase capacity. We were having an integrated resort, which we were putting up with a capital outlay of 3,000 crores.
Right.
But given this uncertainty, we've kind of decided to move that into a couple of phases. So the first phase is going to be in terms of a theme park, which will probably go into construction anytime soon. Whatever licenses are needed for this particular project is completely with us.
Right.
So we're good to go. Then the second phase was hotels and retail. Third was multiplex, so on and so forth. So we will see how that plays out. But yes, it's going to be done in phases.
Okay.
Now, our current business is throwing out cash. We've got a healthy balance sheet, 500 crores after the investment that we made in Peninsula.
Sure.
So we felt since realty is also part of our DNA, Peninsula, I believe, has been one of the pioneers in luxury living and commercial spaces. They have gone through their issues and have now completely cleaned up. We believe that they have a lot of pipeline projects in the pipeline.
Right.
And some of these projects need investments, which we're happy to make. We will strategically get involved with them. We don't want to defocus from our main core business, which is still our gaming business. They've got great execution capabilities,
right,
and they've proved it in the past. So we thought smaller projects, not long gestation periods. To give you an example, like redevelopment projects which are happening in Bombay City.
Right. Quick
investment in, develop, out in between 24 to 36 months. We would not be getting into this if we felt, the IRR would be anywhere between 10-12%. We're expecting 20-25%. So we are hoping to monetize whatever we would like to do. So this is, you're right, a re-entry. Right now, I can't comment on what contribution it will be to my top line.
Right.
But certainly, if there exists, the realty sector is definitely going through an upswing. And if there exists an opportunity, and if we believe that it fits with our company business strategies and ethos, yes, this could be considered as a re-entry and a play into the realty sector.
Right. Okay. All right. Well, Anil, that is all that I have for you. We leave it at that. Thank you so much for taking the time out and speak to us about the company. We wish you the best for the future.
Thank you. Thank you, Agam.
Right. Well, there you have it. That's the management of Della Corp. And taking us through all that lies in store for the company going forward. Well, of course, we have seen about volatility over the past few months. The question is that can we, in fact, expect a resolution when it comes to several of these GST measures, as well as, what can we expect going forward when it comes to some of its upcoming businesses as well. That's a wait and watch on that one. But on that note, we slip into a short break, but don't go anywhere. On the other side, we take up the IT sector. Stay tuned to NDTV Profit. Welcome back to Hot Money. Dark rallies in trade on the back of its luxury residential project launch. We had a chance to speak with the MD and CEO of Dark, Amar Sareen, on the luxury residential demand. Listen in.
DLF has done phenomenally well. We've all seen the two last launches that they have. So just being inspired by their story, and we want to be an integral part of this growth. I think there's enough demand in the market. I won't put a number to it, but I think there's not enough supply for such good housing projects in the market. I still believe that another maybe 10,000, 15,000 houses just in this year can of the same 9 to 12 crores can be absorbed very easily. And more so, in a place like Delhi, where not too many projects come up, people are usually living in ground plus 3 houses, where security and parking is really an issue. People are opting to move out and go into high rises. So that's, I think, majority of the demand where it's coming from.
In line with that demand, what is Dark's pipeline like for this fiscal as well as for 2024, the calendar year?
So we have 3 projects that are lined up for this fiscal, and we have another 3 projects which are on the drawing stage right now, which are going to be launched sometime in the later part of the year. So between these 3 projects put together, 2 in Delhi and 1 in Gurgaon, we expect a top line of roughly 7,500 crores from these 3 projects.
Lastly, a bit on the stock performance. The stock's been doing really well. It's grown about 7 times since it listed. What do you have to say on that?
I think the market has really the real estate market has really supported us. The equity market has really supported us. The products that we have together, the kind of timing that we have, and the kind of response that we are getting, I think that's reflecting on the stock price.
We aim to give access to all willing participants in the markets is the word coming in from Nehal Vora, MD and CEO of CDSL. Listen into what he had to say on rising demat accounts and investor interest in the capital markets.
It's more of really an inclusion process and ensuring that more and more people can come in a safe, secure manner. And it's an aspiration to be a part of national markets.
So how more do you see that investor interest and all kind of adding it to, especially in CDSL's role as well as from the tier 1, tier 2 cities?
See, again, I'm saying that we are here to create platforms and give it to the market at large and let the market accept the way they want. So there is no specific role or strategy to go to a particular area, not go to a particular area. I think it's giving equal access to all. That's our focus.
Well, for now, we are looking at traction in the markets, and I'm going to very quickly address what's happening in the broader markets. Perhaps take a look at a few gainers and losers. And we do have IRFC coming back and looking at a gain of around 6% as we speak. We have gains in Oracle Financial Services as well. That's up and about and advancing by nearly just as much. And then we have Bank of India, which is up by as much as 5.5%. Bank of India was also in focus yesterday and is building on gains today, and it is advancing further. And of course, let's not forget Coforge from the mid-cap IT space. It's a relatively large mid-cap, and that's where we have seen an advance of around 5% at the moment. So those are some of the key gainers in today's day of trade in the broader markets. But we are at the end of this edition of Hot Money. Don't go anywhere. We'll be back in just a bit.